Supply chain disruptions across the Middle East are constricting fuel exports, creating a severe global bottleneck for energy. In the Philippines, the immediate consequence of that global shockwave is an official declaration of an emergency energy crisis, driven by soaring generation costs. Historically, the cost of Philippine electricity is determined by the Wholesale Electricity Spot Market, or WESM. This is the free market mechanism where power is bought and sold daily. But in response to the crisis, the Energy Regulatory Commission enacted a drastic measure. They completely suspended WESM trading. In its place, the regulator implemented what they call administered pricing. The goal is to artificially cap rates and protect consumers from sudden price spikes. By removing those free market mechanics, the ERC has rewritten the baseline profitability models for every major power generator in the country. This new administered pricing model operates on a strict baseline rule. The price of electricity on any given day is directly tethered to a 4-week historical rolling average. The system also grants regulators the authority to manually intervene when market conditions fluctuate. For example, if a severe supply imbalance causes the market price of power to drop below zero, the ERC can step in and adjust that negative price back up to absolute zero. We are going to track how this rigid new structure alters the financial extraction frameworks for key Philippine energy equities. Specifically, we will look at companies with heavy exposure to the spot market, as they are the most impacted by these new rules. The macro energy crisis has resulted in a mathematically protected domestic environment for very specific asset classes. The first major exception to the 4-week rolling average is a specific pricing floor assigned exclusively to coal-fired power plants. Under this framework, coal generation is guaranteed a minimum price of exactly 6 Philippine pesos per kilowatt-hour. This creates an immediate financial discrepancy. The administered floor is higher than the average spot market prices recorded last year. The government designed this specific mechanism to incentivize operators to maintain continuous baseload generation. The priority is preventing grid blackouts. The WESM suspension effectively subsidizes coal-heavy portfolios, securing revenue levels that the free market was no longer providing. Next, we have to look at the dispatch queue. This is the sequential order in which different power plants are permitted to feed their energy into the national grid. The ERC's second major regulatory intervention modifies this queue by introducing a mandate called priority dispatching. Under this rule, specific renewable asset classes, namely solar, wind, and river-based hydroelectric sources, are designated as must dispatch. This grants a significant operational advantage. It guarantees zero idle capacity for these operators, meaning every single watt they generate is immediately accepted and sold to the grid. The must-dispatch rule guarantees that renewable infrastructure operates at full capacity, securing immediate sales for every watt generated regardless of market competition. We can see how this macro regulation translates to corporate execution by looking at ACEN Corporation's operations in Ilocos Norte. The company is scaling hyper-localized, high-volume residential solar as a replacement for slow-moving utility-scale deployments. The primary friction point preventing mass residential solar adoption has always been the prohibitive upfront hardware costs, combined with the inability of many consumers to secure conventional bank credit. ACEN solves this by bypassing traditional banks entirely. They partnered with Fuse Financing, the lending arm of mobile wallet GCash, to offer collateral-free installment plans for as low as 1,300 pesos a month. By integrating mobile wallet lending, ACEN scales utility hardware as a frictionless, accessible consumer financial product. The second engine of this scaling strategy is hardware integration with the local utility, the Ilocos Norte Electric Cooperative. The program leverages a technical framework called net metering. This allows individual households to export their unconsumed solar electricity back into the main grid. Households do not receive cash for this exported power. Instead, they receive direct financial deductions on their monthly utility statements. These monthly grid bill credits are designed to directly offset those 1,300 peso financing payments. ACEN has engineered a closed-loop system where the existing grid architecture effectively pays for its own hardware expansion, rapidly accelerating the company's total generation footprint. We can map how these distinct regulatory changes impact the valuations of specific Philippine equities through a clinical portfolio audit. Looking closely at ACEN Corporation, we see a 100% renewable portfolio, coupled with high legacy exposure to the spot market. This positioning grants the company maximum upside execution from the ERC's new priority grid routing. Then there is Semirara Mining and Power Corporation. While it shares high spot market exposure, its portfolio is entirely concentrated in baseload coal. For Semirara, the WESM suspension stabilizes its revenue floor at 6 pesos, increasing its leverage for future government contract renewals. The remaining major utilities, Aboitiz Power and Manila Electric, sit on the opposite spectrum, holding minimal WESM spot exposure under 10%. The structural mechanics protecting these two companies are their reliance on 10-year natural gas supply contracts that extend through 2035. These long-term contracts insulate their balance sheets from price shocks in the liquefied natural gas market. Standard financial theory dictates that supply-side crises universally compress utility profit margins due to rising input costs. The ERC's administered pricing model mathematically overwrites this risk. It isolates the Philippine power generation sector from global volatility, securing its status as a high-yield, defensive safe haven for investors.